Good morning and welcome to today's live webinar where we look at ASX investment opportunities in review. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. The basis of today's analysis is formed around the algorithm signals in the members area, which I'll be showing the charts and the watch lists and the signals in today's recording. Up on screen's the performance of that algorithm model year to date, and whilst we had a fairly flat start to the beginning of the year, which outperformed the ASX was negative during that quarter. We've outperformed the market predominantly through being long resources, healthcare, being out of the banking stocks. So part of today we'll have a look at sort of what the basis of this outperformance is, and obviously look at the high conviction ideas and focus in on earnings season and earnings results. If you'd like to start a 30-day free trial of the member area tools and charts and algo signals, or if you're already trialing it and you just want to take advantage of the discounted offer that we're providing at the moment, where you get 1 year's subscription to the professional level for $1,320, and that includes an education folder with some material in it that we'll send you as well. So if you'd like to take advantage of that discounted offer, please contact either myself, Leon, at Investor Signals, or call our office on 1300 614 002. Moving straight into a graph of, I think that maybe we set the scene today with having a look at sort of the US market, and I think that the theme that we'll be following today is the need to probably look at raising cash given where the market sits from a valuation standpoint. So what I'm doing here is going into the watch list, selecting my custom list, which is where I've added codes that I'm interested in, and we're just going to click on this and bring up a chart of the Dow Jones. What I guess is capturing my attention is the market's had a pretty strong rebound after the 10% sell-off early in the year. We've had a reasonable recovery in the market here, and with the market now looking like it's running in a resistance at sort of 25,700 points, I'm inclined to think that you just need to take a slightly cautious approach to asset allocations, and where you can trim gains, now's the time to do it. So if we look at the domestic market, what that means is we're just starting to see a little bit of selling on Friday and again today, but as we go through sort of some of these names, I think you'll sort of share the view that some of the valuations are looking a little bit stretched at the moment. All right, so to begin today, what we're going to do is maybe we start with the earnings calendar, and then I'll go through the recent signals. So up on screens, the earnings results. We've really kicked off at the beginning of this month. Last week, the key numbers were AMP, which really came in line with consensus. CBA was a little bit disappointing, maybe 3-4% below where the market was looking. Tabcorp exceeded. Tabcorp was one of our high conviction ideas coming into the earnings result. I think where Tabcorp is at the moment, it's full value. So whilst the earnings result was encouraging, I still think there's probably some level of headwinds around revenue growth. The cost synergy savings are very encouraging, but at the moment, I'm not convinced that there's another leg higher in Tabcorp from where we sit at the moment. So it's either taking profit or selling covered calls. AGL's disappointed a little bit. There's going to be headwinds for retail electricity pricing here, and that may then lead to I think AGL having probably looking at resistance where it trades at the moment. Crown earnings result exceeded, driven by higher VIP earnings in Melbourne, and also the positive there was the cost controls in across the Crown business, which was one of the themes that was driving our overweight or high conviction call to Crown. Suncorp did better than expected. James Hardie, I think the concern there is forward guidance, and we'll have a look at the charts for some of these names. News Corp, I thought that was encouraging, underlying 20% earnings growth, so it's one that we might keep an eye out on an algorithm buy signal over the next 2 to 3 months. REA Group was a recent algo signal. We put a post on the blog today, so if you haven't read the blog, just revisit the commentary there on that. And then today we've had AZJ, Bendigo, which will have a look at the regional banks, BlueScope, which did slightly better than market expectations, as did JB Hi-Fi. And then just having a look out for this week, couple of key profit announcements: Cochlear tomorrow, Domino's, NAB, Computershare. We're cautious on that result. CSL, IAG, we view as a buy right. Wes Farmers looks a little bit expensive to us. Downer EDI is a high conviction one that we'll cover today, so it reports on the 16th. Origin, we like that coming into the earnings results, so buying that on a dip will be something we cover today. Sonic Healthcare, I think if that corrects a little bit further, we see value there, and we'll watch for the next algo buy signal. Link is one that we've been watching, so we might just revisit the chart there for that one. And Ansell, so coming into sort of the final part of the earnings season, Ansell we think is a little bit expensive. Fortescue we quite like. Woolworths. So I guess the key results, just going back over this, what we want to focus on, I think Computershare's expensive. Downer EDI's high conviction. Origin's high conviction. Sonic, we're going to wait for a little bit further pullback in price. And Link, so they'll be some of the charts that we focus on in today's recording. Okay, so now what we do is click on watch list. We go down here, select recent signals, and let's just move through these. So APN News, we've got a higher high, higher low formation, support here around 240. It's not a stock that we're really active in. Capital Health, same thing, moving up to a higher high, higher low, support here around 28 cents, but not a stock that we're active in. And some of these I'll skip through so we can see, we might just shuffle that support up there a little bit closer. So H21, so somewhere around that 239 looks like support. Hub24, now this is something I commented on in prior weeks where we saw BT come out with a discounted pricing model for their asset management or platform service, and that caused the likes of Hub24, Netwealth, IOOF to sell off, and we've started to see the algorithm buy signals come in these names. I think from these oversold conditions they can bounce, but I don't expect them to recapture these old highs and probably run into resistance somewhere between $12 to $13 there on Hub24. Link Administration. So this is a stock that we like the long-term fundamentals here, and we're talking about sort of the buy-side opportunity at around $7. The stock rallied up to $7.80, and we've now had an algorithm sell signal. So we look for it to pull back to around this $7.20 level, and we'll keep an eye on that in future recordings and update you when we're looking at buying that again. Not doing there in Monash. So here's Netwealth. This was one of the similar to Hub24, Netwealth listed on the ASX. At the end of last year, the stock performed very well, trading on a high multiple, but there are some headwinds for the industry around pricing compression, so it's not an area of the market that we're focusing too much on, but just worth making note of the higher low formation. Now, REA Group, this is one that I added to the blog today. We had an algorithm buy signal at $80.50. The stock's now pushing up to $87. The F-year 18 earnings results for REA met market expectations. The company's growing both revenue and underlying profit by about 15% as a forecast into F-year 19, and I think REA can push back up and take out this prior high, even though there are some headwinds for real estate listings at present. or perceived volumes and the impact that obviously any downturn in the real estate market may have on REA Group. But I think sort of the global reach of the business, strong earnings growth, we like this name, and you probably just think about running a stop loss below that $80.50 level. Moving through a couple of these names. So SEEK disappointed the market a little. The market was looking for 20% earnings growth. SEEK delivered flat earnings. Now the company points to the reason that is they continue to invest in the business for future years, and the markets receive that reasonably well. So analysts still feel that in 2020 and 21, SEEK can deliver 20% earnings growth per annum. The stock is not whilst it's in our model portfolio, and it's been added back in off this $19.60 level in a backdrop where we think the market's sort of fairly close to resistance at the moment. It's hard to see over the short term SEEK rallying back and taking out that high, but certainly momentum favours this to the upside. But maybe just be a bit cautious and think about running a stop loss below that 1950 level there. Smart Group not doing there at the moment, nor in structural monitoring, nor there. And there we are back. So the relatively small group of stocks within those within the recent signals, which is why then I wanted to today jump into the watch list. And I'm going to actually try to go through most of the stocks in the top 100. We'll move through these pretty quickly, and then we'll just come back and summarize the high conviction ideas that we're focusing on at the moment. So in the case of A2 Milk, we were looking for it to pull back and find support there on that prior sort of gap there, so at 880, but the stock price looks to be pushing higher. It's under algorithm buy conditions there at the moment. So some of these, as I skip through, AGL disappointed on a forward guidance basis, so flat earnings growth. So it's really a stock that if you own, you want to be selling tight covered calls over to strip the income out of it, but it is under algorithm sell conditions at the moment. So Amcor made a takeover bid for an American competitor. The market is concerned about the valuation that Amcor will be acquiring that business at, but at $14, I think the stock's good value, and there's an opportunity to buy it and sell covered calls at the moment. Ansell, so this is one that we've looked at in prior weeks. So the concern here is the stock's overvalued. So this is one that we looked at for the short side, and that's really for clients that may be running CFD account that we continue to think Ansell looks expensive. Now, one of the structural issues to think about across the Australian market at the moment is all the banking stocks have lower lows and lower highs. And that'll be one of the themes that we revisit. Now, here we go, APA. So this is one of the high conviction ideas that we've been talking about. There's a takeover bid that's likely to be finalised at $11 a share. And at around $10.50, we look to take profit on APA Group. So we'll continue to revisit that one. So Bendigo reported its results this morning. I haven't had a chance to go through this in detail at the moment, but all the banking stocks under algorithm sell conditions, and we know the structural sort of headwinds that the banks face on a revenue growth standpoint. Now, right at the moment, to me, Rio looks more compelling than BHP. BHP is likely to find support around this $32 to $33 level. But from a valuation standpoint, when we get to Rio, I think you'll probably agree that maybe from a short-term trading or investing opportunity, probably the timing there on Rio looks better. My view on most of whether it's BHP, South 32, is they're close to full value and want to be selling calls. Now, Boral's, as with a number of these housing stocks, are moving lower. Boral made the acquisition of Headwater Group over in the US, and certainly not the first time that we've seen an Australian company acquire offshore assets and find 12 months down the track that the asset's not quite as robust as what they had thought prior to the acquisition, and Boral's now experiencing that. So I expect that the problems that they'll have with the true underlying earnings and growth rate of Headwater probably weighs on the share price of Boral, and it is under an algorithm sell signal. So the way I view this is you got resistance here at 680, and in a weak market it probably struggles to move back above that. Bank of Queensland, so again worth pausing here and just having a look at the algorithm signals here on these banking names. So we've got this lower high formation, resistance at 11.23, so looking for the banks to move lower below those resistance levels. Brambles, so we'll revisit that maybe in next week. CBA, so under sell conditions, resistance there at around $76. That seems unlikely. Coca-Cola, I think, is expensive. On the buy side, if we saw it back at around $8.50, we would look at this. But I think that the stock struggles up where it is at the moment and actually moves quite a bit lower from where it is at the moment. Challenger under resistance here, and you can see I've put in two resistance levels there, one at 13, one at 12.40, and I think that actually moves lower. CIMIC Group. Now, this was one of our high conviction ideas coming into their earnings result. We stopped to think about this and the impact that it has on Downer EDI, which reports their earnings results on Thursday. So CIMIC delivered 10 to 12% earnings growth, and based on work in hand, there's no reason to think that CIMIC can't continue to deliver 10 to 12% earnings growth over the next 3 years. The stock's expensive where it is at the moment now on a 3.3% yield. It consolidates, it moves sideways. If we could buy back into it at $46 on sort of any correction in the US market, I think that's a good buying opportunity in CIMIC. Otherwise, it moves sideways and maybe 6 months out starts another rally. But the immediate opportunity here is that the Downer Downer operates in a very similar investment segment or business segment as CIMIC, and buying Downer ahead of Thursday's earnings result should provide some uplift in the share price. So we'll have a look at that in the recording as well. So Cochlear report their earnings result tomorrow, so that'll be an interesting one to have a look at in next week. Computershare, I think, is very expensive, and looking for them to disappoint with the upcoming result. CSR, so you're seeing Boral, James Hardie, CSR all struggle a little bit, and I think this is just reflective of what appears to be a slight slowdown in the housing market, more so in Australia, but potentially in the US there as well. So Crown Resorts, this was a high conviction idea that we had coming into the earnings result. The stock rallied from sort of $13 up to $14.20 thereabouts, or maybe a little bit higher, traded as high as $14.59. We mostly took profit between $14.20 and $14.30. The stock trades on about a 23 times multiple, and it just looks a little bit expensive at the moment. So if we were in an area of the market where we felt that momentum was going to continue with PE expansion, but I just don't think we're there at the moment. I think the market's fairly cautious on some of these PE valuations, and unless there's underlying earnings growth, we're not going to see further PE expansion. I think for that reason, it's worth just taking profit and building some cash in portfolios right at the moment. CYB, we'll be keeping an eye on this one. We're looking for it to pull back around this 550 area, and we'd be buyers of that, but not doing anything there right at the moment. Domino's, a bit cautious on that. I haven't gone through today's earnings results. Here we are with Downer. So any softness, today, tomorrow, ahead of Thursday's result, I'd see it as a buying opportunity. If we could add down back into portfolios around 720, so we bought it at lower levels, we've taken profit, but to buy it back at 720 ahead of Thursday's result, or even really anywhere between where it is at the moment and that 720 level might be something to have a think about. It's one that sits on our high conviction list. Evolution, so that's one that I've covered, so finding support here at around 275 and looking for that to move higher, and that'll be one that we'll cover. When I say we'll cover it, we'll review it at the end of the recording. GPT, so these property trust names, we've seen yields in the US at the end of last week come off or retrace. That's helped push some of these yield-sensitive names higher, but they are looking expensive based on low levels of earnings growth over the next year or two. So taking profit there on GPT. Healthscope, so they report their earnings result in... Well, I'd need... maybe I just need to revisit that at the end of the recording, but certainly in the next week or two, Healthscope report, looking for that result to be better than the market expects. So we're thinking that around this 216 level is a good buying opportunity there for Healthscope. Harvey Norman, lower low, lower high, cautious on this name, and we had the algo sell signal, so on the short side of the market. I think Harvey Norman is something that we can now add to the list. Insurance Australia, we're doing buy rights over that. JB Hi-Fi, so this was the view here, was JB Hi-Fi over Harvey Norman. I haven't gone through JB's result today, but judging by the share price reaction, it's either met or slightly exceeded market expectation. So we got support there at around $22. But still comfortable with that call that JB Hi-Fi certainly looks better than Harvey Norman. So James Hardie. So when we look at this, the concern the market really had here for James Hardie was the forward guidance into FY19, where the company had been growing earnings around 15 to 20%. The company's really guided towards flat to maybe 10% earnings growth into 2019, and highlighted that that's dependent on the US housing market holding or maintaining current levels. So that was really the key catalyst that caused the share price to fall from 23 sort of down to this $21.50, $22 level. But the stock is under algorithm buy conditions, and we do see support here at around this $21 range. So maybe for the short term, it's a case of buying and selling tight covered calls. But if we see a little bit deeper sell-off on any weakness in the US market this week, I think buying down at sort of sub $21 would actually provide a good short-term opportunity in the market. Link we've covered. Medibank, we think this is getting expensive, and we've been taking profit. It was one of our high conviction ideas, so we're promoting buying Medibank between this sort of $283 level, and now we're suggesting take profit. Just mindful the last two half results for Medibank showed little in the way of revenue growth. So NAB, as with the other banks, lower low, lower high structure, I think you just got to be cautious. To me, you're not really getting rewarded for taking an overweight position in the bank. So while investors might be inclined to hold a portfolio of Aussie banks for the dividend yields, there's better ways of constructing a portfolio and creating income without being overweight the Australian banks. Little in the way of revenue growth, and there's risks around the credit cycle, so you're just not getting rewarded for a large exposure to the banks. Newcrest, it's moved sideways now for 2 years. We've had an algorithm buy signal here at roughly $20. Hard to know when it breaks out of this consolidation range, but we're leaning towards the breakout being to the upside rather than the downside of this consolidation. Gold's very oversold at the moment, and the driver of that really has been as the US has stepped up pressures on China with trade tariffs, the US dollar's rallied and most other global currencies have fallen. When the US dollar's strong, at least this is the current correlation in the market, is when the US dollar's strong, gold's weak. So the likely catalyst for gold to rally will be any perceived agreements with China that that eliminates or starts reducing these trade tariff discussions and issues that are being implemented. So looking for US dollar weakness to then be the driver of the rally in gold at the moment. Origin Energy. So this is a high conviction idea. I think Origin's the income that Origin's generating from their LNG assets at Curtis Island are really impressive, and we think that's a theme that continues to deliver value for shareholders. So any opportunity to buy Origin on weakness, at the moment, given what we know about where earnings sit and the company reinstating their dividend, fair valuation is probably 10.50. So therefore, the view is that it probably mostly trades sideways, but certainly any opportunity to accumulate on weakness is something that we want to look at there. And if we just go back to that earnings calendar, I think we had Origin reporting this Thursday, so that'll be one to keep an eye out for. I reckon not doing there at the moment. Oz Minerals looks okay, positive higher highs, higher lows, consolidating around that 950 level. Perpetual, I'll just point out here the negative structure and the resistance at $45. The company's seen fairly significant outflows in their managed funds. REA Group we already covered, and there's a comment on the blog there. Ramsay Healthcare, finding it difficult to develop a support level. The stock's nearing a 3% dividend yield. If we saw another leg lower down to $50, I'd encourage you to really look to take action on that. I think at sort of that low 50s, it looks very good long-term value to me. Rio. So we've seen Rio went ex-dividend last week. And when I look at this relative to BHP, to me, what's developing here is an opportunity that maybe requires closer attention. BHP should be well supported and move sideways as a result of the return of capital to shareholders. Rio should be supported by a large share buyback. This sell-off at the moment, whether we get down to $70, we'll just have to wait and see. But ultimately, this will create a buying opportunity, and we'll be watching that closely and updating you on the blog there. ResMed not there at present. South 32 looks like it's going to test that support level there of around, say, $3.50 thereabouts. But Centre Group went ex-dividend today. Seek, we've covered that one. Stockland, so a lot of these stocks with exposure to residential property, have this lower low, lower high pattern, so a bit cautious there. Now, Star Entertainment. So this is one that reports on the 24th of August. And based on the jump in VIP gaming revenue for Crown and the completion of the new VIP gaming area that Star has completed in Sydney, and the works that they've completed on their facilities on the Gold Coast, we're expecting for Star Entertainment to surprise on the upside. So we maintain our high conviction call on this coming into the earnings result on the 24th, and thinking that maybe it could trade up to that sort of, maybe at 540, 550 off the back of a good result. Sonic Healthcare, if you can buy this stock at $25, I think that's very good value. So we'll keep an eye on that. And I'll bring up the summary email at the end of the recording. Santos, as with Origin, we continue to like these oil and gas names. Suncorp, good result. Sydney Airport, so within this sort of infrastructure space, Sydney looks better than Transurban, from a technical standpoint. Buying Sydney Airport's going out, selling covered calls over it. We're generating about 10 to 12% cash flow on an annualized basis from Sydney Airport. So Tabcorp, so this is one that we own coming into the result. We had the algo buy signal down here at around 415, 420, and at these levels I think it's worth taking profit at the moment. We're a buyer again if we saw it drift back below sort of 470, but for the moment, given where the index is, I don't think it hurts to be sitting on a bit of cash and maybe rotating that into deeper value opportunities. Transurban, just mindful here that it's under algorithm sell conditions. Their dividend by a penny or two, the dividend growth forecast where the market was looking for 10% dividend growth into the next 12 months, that's been ratcheted back a penny or two. So not by a huge amount. So we assume Transurban mainly moves sideways, but it looks like there's a little bit of resistance in the chart there at sort of those lower high formations. Telstra will be interesting to have a look at this upcoming earnings result, but Telstra is mostly probably a 2-year turnaround story coming into the separation of Infrastructure Co from Telstra Retail. Unibail, this is under pressure as a result of weakness in European markets. I think Unibail report their earnings result at the end of August, so still of the view that for clients running CFD accounts, buying this stock ahead of the 31st of August result. And the reason why you would do that through the CFD account is you just don't have the tax implications of buying the CDIs on the ASX. But any weakness to accumulate that ahead of the result, because this will be the beginning of the result of seeing Unibail combined with Westfield, and we'd expect to see more commentary out of the company around cost synergies and what the benefits of the merger are going to look like for the business. So buying weakness ahead of the 31st of August result is one of our high conviction ideas there. Vicinity, nothing there at the moment. Westpac, again, just pointing out in the banks, lower lows, lower highs, resistance that these banking stocks need to get through. Wesfarmers looks expensive. Woolworths, we want to buy this on any weakness, somewhere between 28 and 29.50. We'd like to see it at lower levels, whether it gets down there. It's not under algorithm buy conditions at the moment, so we are being a little bit cautious. But I'd expect to see an algo buy signal trigger around 28.50, thereabouts in Woolworths. And there we are, back to A2 milk. All right, so let me just bring into screen the notes that I have, and we'll develop these and with a view to working towards maybe getting a summary or a bit of a cheat sheet out to the listeners of these recordings where we're summarizing sort of the different categories of stocks that we're looking at, but just trying to develop some notes here that will assist you. AZJ, we think, is getting to a point where there's value, but we're patiently waiting for the algo buy signal. Sonic, we're looking for maybe a buy on the dip. It'd be nice to see it down at $25. Woolworths, it'd be nice to see it down at sort of $28.50. Rio, and a lot of these become relevant if we get 3 or 4 days of selling in the US, which we haven't seen for a while. So just hence why I've put it under a category of keeping them on a watch list. The high conviction ideas, we like APA up to 10.50 based on the finalisation $11 takeover bid. HealthScope, we like that coming into the earnings result, and just to try to identify the date for that HealthScope result is the 21st, so we'll just add that in there. Crown, so we've really taken profit on that. The downer is one of the high conviction ones, so if you can pick that up on any weakness, tomorrow, Wednesday, ahead of the 16th result. Origin, high conviction. Tabcorp, we've taken profit on that. SGR, so that's high conviction coming in the result on the 24th. And that may have upside of sort of 5 to 10% off the back of a good result. If we look at the general buy signals, CSR, it's oversold, but we're cautious of this housing data. EVN, we do think gold rallies as the US dollar retraces, and whether it's hard to know whether that US dollar retracement's a week away or 3 months away. But gold does look oversold, so whether you're playing it through Newcrest or Evolution, both have algo buy signals at the moment. A couple of income trades that we like, IAG, so doing buy rights, generating 10 to 12% cash flow. JB Hi-Fi over Harvey Norman. The more I look at Harvey Norman, I think could actually be a short. So, Link, we mostly missed the rally in this name, so we're waiting for the pullback in that. Medibank's hit our target, so we're taking profit. Cimix, we're taking profit on that and just being patient. We might look at a pullback on weakness at, say, $46, $46.50 there, and we'd look to add it back in. Newcrest I've covered. Sydney, a little like IAG, that's really just a income contributor to portfolios through selling tight covered calls and generating that 10 to 12% cash flow. URW, which is the uni bail, so that's a high. I'll shift that up to the high conviction area, and we'll make a note of the earnings date there, which I think I've got as 31st of August. So any weakness ahead of that result, I think, will create an opportunity there. And a key point to think about is just these lower low, lower high structures in the banking stocks. So to review the ones that we want, so let's highlight this coming into the earnings result. Let's highlight that coming into the earnings result. I think these two up here, you want, well, really all those three, you want to keep those on your watch list. I think SG, then these two here. So if you're having to narrow down these opportunities, and that looks like it probably misses and disappoints in the earnings result. So what we'll start to do is try to consolidate these notes into something that can be distributed, but in the meantime, whilst that's up on screen, if you can make note of that, and I look forward to speaking again next week. Thank you.